Hello traders, welcome back to Nova channel and let's continue gold trading plan. And now let's get started. Gold has just bounced back after a sharp drop, but is this the start of a new bullish leg or just a temporary pullback before another fall? Today we will break down the latest market developments and I will show you how combining Fibonacci, EMA and key support or resistance zones can help you pinpoint high probability trade entries. Let's review gold information. Gold saw some buying interest during Asian session, recovering from Monday's steep decline to $33.41, its lowest level in over a week. The US dollar failed to extend its two-day winning streak as traders moved to the sidelines ahead of today's high anticipated US CPI release. This CPI report will be a major market mover. A stronger than expected reading could push the DXY higher, increasing selling pressure on gold. On the other hand, a softer reading could trigger a USD pullback and fuel a gold rally. The outcome will heavily influence expectations for the Federal Reserve's rate cut path, and that means direct implications for gold direction in the coming weeks. Now we will move to the next part, additional key news to watch this week. Besides today's CPI, there are other events that could sharp gold price action. USD PPI, scheduled later this week. This is another inflation guard that can reinforce or contradict the CPI narrative. And the next we have FOMC member speeches. Several Fed officials will be speaking and any hints about monetary policy shifts could move market. Besides that, US retail sales, a strong or weak reading will influence Fed rate expectations indirectly after gold. And lastly, geopolitical developments, ongoing tensions in the Middle East, and global trade uncertainties remain supportive for safe haven assets. And my personal comment about gold market today is the CPI is expected to edge higher, which may initially lift the DXY and weigh on gold prices. However, we could see a brief recovery before the US session as traders position ahead of the data release. And this is a high volatility environment. Risk management is critical. Okay, so now let's move on to the next part. We are expecting technical analysis and price scenarios. You can see that on to our chart. Fibonacci retracement from July 31 low to the August 8 high shows price has pulled back into 0.618 golden zone, which is the level 33.40 to 33.28, a common area for buyers to step in. And next, we'll get notice to EMA are sloping downwards, signaling a short-term bearish bias, but price is now testing a major support zone. And lastly, key confluence zone. 33.40 support aligns with 0.5 Fibonacci level and a previous swing low. And we will have two scenarios. The first one, price consolidates between 33.40 to 33.55, breaks above the level EMA 20, successfully retests and heads toward 33.78 to 33.80 resistance. And second scenario is risky. Price breaks below 33.40 and tests 33.28 to 33.20, which is the Fibonacci 0.618, before any potential rebound. And as usual, let's check the signal on the chart. And today I will show you my trading tips by applying Fibonacci, EMA, and Confluence. First, regarding to Fibonacci retracement, use the most recent swing high and swing low to draw Fibonacci. The 0.5 to 0.618 retracement zone is often where major reversals or strong reactions occur, and this is always for confirmations, for example, bullish engulfing or break of EMA before entering. And next, today we will change a bit using EMA 20 and EMA 50. EMA 20 reacts faster and shows short-term momentum, and EMA 50 reflects the broader trend. When EMA 20 crosses above EMA 50, momentum is shifting bullish. The opposite signals potential weakness. And the third part, confluence zones. Let's combine Fibo levels, EMA positioning, and horizontal support and resistance zone for higher probability entries. The more factors aligning at a zone, the stronger reactions is likely to be. And lastly, it's relating to fundamental analysis, news-driven trading. On days with major news like CPI, let's avoid entering just before the news release. Wait for an initial volatility spike to settle and trade confirmed direction. And always reduce position size in high volatility sessions. As we head into a news-heavy week, gold traders must be extra vigilant. Combining technical tools like Fibonacci, EMA, and confluence zones with a clear awareness of the macroeconomic calendar will give you an edge. And if you want daily gold trading plans with deep technical breakdowns, join Nova's Scalper community. Links in the description below. And happy trading! See you in the next video.